Shares of Affirm are falling after reporting results for the first quarter. Joining us now to break down those results is Affirm CEO Max Levchin. Max, it's great to have you back on the show. Welcome. This was a beat and raise quarter for you, and gross merchandise volumes were up 35%. Revenue, perhaps even more interestingly, up 41%. Walk me through what you're seeing across the business right now.
We're firing on all pistons. It's, I cannot be happier and prouder of the team. We just really nailed it this quarter. Probably maybe more exciting to me at the product level. We're touching 20 million active consumers. We're over 5.1 transactions per user. So every part of the ecosystem we built is just growing and growing and growing. We're very excited about the future. We are starting to roll out the Visa Flexible Credential card functionality. So just many things are happening. We just rolled out. I'm back from London. If I look sleep deprived, that's because I was there to launch our expansion across the Atlantic. So many things are going really well. Excited to deliver a beat and raise, and just looking forward to declaring ourselves GAAP operating and positive in a couple of quarters.
So let's talk a little bit about that expansion too then, because in the U.S. you're continuing to take market share. You are the largest buy now, pay later player in the U.S. What does international enable, especially as you do continue on this path towards profitability?
Just more opportunity. Everywhere we go, we see demand for our product. One of the more maybe surprising, unsurprising takeaways from my conversations in London was just how delighted merchants there, not just our merchants in the US, we plan to bring with us to UK, but local merchants, pure UK players saying, we can't wait for you guys to be as widely available as possible, because the need for these longer term, better underwritten, higher quality, consumer-friendly transactions is just not met. And we're excited to bring it there. And then in the US, you're right, we are the largest player. We accelerated. We used to be about 32%, we estimate, of the total pure play BNPL space. We're now 34%. And we're more than half the revenue of the entire industry in the US.
As you're talking, the stock's turning higher. It's now at 2% right now. I know you have these partnerships with Amazon, with Apple, with Shopify. That's helping to drive your growth. JP Morgan, though, in their most recent analyst note, talks about the fact that Affirm is more tied to discretionary spend. I wonder whether that's actually, in fact, true when I do see revenue numbers that are higher than volume numbers. And if so, what you are seeing in terms of the health of the consumer right now.
No, I think Affirm is for everyone. The thing that's kind of amazing about the brand and the customer relationship that we've built is we help folks finance things that are genuinely expensive, multi-$1,000. I'm a big consumer of cycling items, and bikes are not cheap, and paying for them over 18 months longer is something that we're very good at, and this appeals to folks in any credit range. And then all the way down to a couple of $100, just splitting it across 3 months to make it a little bit easier in a cash flow works for both sides of the credit spectrum. And so for some people, we are a 4 times a year major outlay, want to plan my expenses carefully. And for others, especially our card holders, we are 2 to 3 times a week. And both, we have a wonderful relationship, helps that we don't charge late fees. We don't screw our customers. We don't use things like deferred interest. And so the product is broadly appealing. We're now of the kind of scale that major card issuers can brag about.
So what will a Trump administration mean for the company? And what do you think it means for the state of the consumer and the state of the buy now, pay later business?
I think the trend we are writing is entirely secular. Buy now, pay later, or we think of it as pay later, broadly is about 7.5% of overall e-commerce. So there is, 7 down, 93 to go, just in e-commerce. And offline is rapidly growing. Half the volume for a card comes from offline, and it's basically a round-off error for now, just how small it is, meaning how huge the TAM is. And so I think the secular trend is pretty much independent of whoever's in the White House. But people in red states and blue states and purple states borrow money from us and pay it back with remarkable consistency, and we're excited about that. So I expect very little change in the growth opportunities that we have.